I think NVIDIA is undervalued.
What?
Undervalued.
On what basis?
Because the future is much bigger. NVIDIA is just one example.
Right.
Okay? What about the total, Gen AI future? What is the value of the future? Is this a bubble today or not? Okay? Some critics, the most negative guy says, oh, this AGI, ASI, in 10 years, maybe only 5% is actually useful or replacing people's job, but 95% still the same, no change. It takes time. So I say, okay, let's accept the most negative critics' view. That is only 5% change, 95% unchanged, but what is that, ASI investment required to take? Okay, 10,000 smarter than mankind. How many gigawatts? We were talking about gigawatts just before me.
Yeah.
I have predicted it will take 400 gigawatts of AI data centers power. 400 gigawatts. That's bigger than total US electricity. And it will require 200 million chip. Okay? The cumulative capex, $9 trillion. $9 trillion. How do you recoup? How do you recoup? It's too much investment for many people's view. I say it's still very reasonable capex. $9 trillion is not too big. Maybe too small.
You like to think big.
Yeah. So let me say, what is $9 trillion cumulative? But if the 5% of GDP in 10 years from today replaced by ASI, what is the number?
Right.
5% of global GDP is $9 trillion. $9 trillion per year. If the ASI produce you $9 trillion per year, cumulative investment of $9 trillion, small money.
All right.
Small money. You recoup in 1 year for the total cumulative. So that means $9 trillion capex investment you can depreciate. 1 year revenue, that means like 50% profit. 50% profit. It is going to be $4 trillion net income per year. $4 trillion net income shared by new GAFA. 4 companies will take $1 trillion profit.
And you want to be one of them?
Of course.
According to Jim Cramer, Nvidia stands to gain a great deal from Alphabet Incorporated, the parent company of Google, as it aims to boost investments in AI infrastructure next year. What transpired? Cramer wrote on X on Wednesday, "It's important to note that Google will be investing even more in AI infrastructure next year. It ought to be fantastic for Nvidia." Wall Street was pleasantly surprised by Alphabet's third quarter earnings report, which showed a 15% increase in revenue to $88.27 billion. Alphabet's strong performance and well-timed technological investments are highlighted by this financial expansion. Google's AI initiatives are paying off and driving success, according to Sundar Pichai, who also stated that the business is uniquely positioned to lead in the era of AI. "It's only the beginning for all of these AI features. Here, innovation and advancement are happening at a very quick speed," he remarked. Why it is important Nvidia and Google have been working together to develop AI technologies. Google Cloud and Nvidia extended their collaboration in March to enable their teams and cloud clients to take advantage of the groundbreaking capabilities of Nvidia's Grace Blackwell GPU. In an effort to increase competition with Microsoft Corp and OpenAI, Google and Nvidia partnered on AI expansion in August. This calculated action was a component of Google's strategy to expand its enterprise AI technology offering at its yearly cloud conference in San Francisco. During its third quarter results announcement on Tuesday night, Alphabet, the parent company of Google, said that it spent $13.1 billion on capital expenditures during the quarter, a 62% increase over the $8.1 billion it spent during the same period previous year. Additionally, Google anticipates spending the same sum on capital expenditures in the fourth quarter. All things considered, this points to $51.4 billion in total capital expenditures for Google in 2024, a 59% increase over the previous year. Google predicted that capital expenditures would rise in 2025, but not to the same extent. Naturally, the company's AI investment is largely to blame for this surge in capital expenditures, and Nvidia is reportedly receiving a sizable portion of the larger budget. During its conference call, Google affirmed that a significant portion of its capital expenditures are allocated to its technical infrastructure. According to the corporation, the largest component is the investment in servers, which is followed by data centers and networking equipment. Because of our AI technology, Google is ideally positioned because we are investing in all of the top AI accelerators, GPUs, TPUs, and CPUs that are available, according to Chairman Sundar Pichai. Pichai spoke on its wonderful partnership with the AI behemoth NVIDIA, saying that they are excited for the GB200s and we will be one of the first to provide it at scale. The Blackwell AI superchips and servers from NVIDIA, which will begin delivering this quarter, are referred to as GB200. The Google earnings capex update, according to BA analysts, is neutral and in line with market expectations. They are still, however, making a strategic buy call on NVIDIA ahead of the company's other major partners, Microsoft and Meta, which are both scheduled to release their earnings on Wednesday after the close. The analyst points out that while META delayed its annual capex projection from the customary third quarter to Q4 2024, it will probably gradually prime the market for greater numbers, which may indicate a bullish outlook for NVIDIA. Blackwell delays could cause quarterly capex volatility for msft, but the company is anticipated to steer its expenditure plans cautiously. They indicated that NVIDIA might do better if one of these things happened. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts. So hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
Thoughts on NVIDIA's chart, please.
Yes, slowing, upward trajectory is definitely something I would comment on here because we did see a little bit of bearish divergence on the RSI during the previous, highs that we were making here. Price made a new closing high. RSI did not. Mismatch between price and RSI. Also, only managed to stay in the overbought area for 1 day in both cases before kind of a reversal there. Notice as well, a longer-term downward sloping trend line here was actually what happened here. We kind of touched against that same level here. So, it kind of displays that the chart is not having the same pace of the gains that it once had here. So notice like we had, these old highs here. Our subsequent high point only like 2.5% or so, I think, above the previous highs here before some consolidation. So now we can see that we have also broken below our green trend line on the RSI. Momentum slowing down here. We were not able to stay above our old highs there near 140.76. Now we are down a little bit on the day. We're below our blue linear regression line, our line of best fit, our idea of fair value as we head into earnings here. So, not uncommon for momentum to slow into earnings, but, to Don's point, we've had a lengthy gain here, and it seems like perhaps we could be running out of steam. Support to the downside, 21-day EMA, point of our old high close here, around 135.50 or so. Then the last set of highs below that, and then subsequent lows around 130. To the upside, old highs 144.42, plus 1 standard deviation channel, 1 standard deviation above linear regression line, 172. So a big jump beyond there. Not saying it's going to get there. That's just what the projected resistance could be.
All right. Well, we know NVIDIA shareholders are keeping a keen eye on all the earnings this week and the AI.
With its recent promotion to rank number 2, buy, investors may want to place a wager on NVIDIA. One of the strongest factors influencing stock prices is an upward trend in earnings estimates, which is the main reason for this upgrading. The ranking is based only on how a company's earnings situation changes over time. By using a consensus approach, it follows the EPS projections for the current and upcoming years from the sell-side analysts who cover the stock. The rating method is highly helpful for individual investors because a shifting earnings picture is a significant element influencing short-term stock price changes. Since Wall Street analysts' rating upgrades are primarily based on subjective criteria that are difficult to observe and quantify in real time, they could find it challenging to base their choices on them. Therefore, NVIDIA's rating improvement is simply a constructive assessment of its profits projection that may benefit the company's stock price. It has been demonstrated that there is a substantial correlation between the short-term price movement of a company's stock and changes in the company's future profits potential, as indicated by revisions to earnings estimates. The influence of institutional investors who determine the fair worth of a company's shares based on earnings and earnings predictions is somewhat to blame for this. Institutional investors usually purchase or sell stocks based on changes in their valuation models, which simply result in a greater or lower fair value for the company. The stock's price then moves as a result of their large investment activity. Growing earnings projections and the ensuing rating increase for NVIDIA essentially indicate that the company's core operations are becoming better. Additionally, the stock should rise as a result of investors' appreciation of this improved business trend. This manufacturer of artificial intelligence and gaming graphics processors is predicted to make $2.82 per share for the fiscal year that ends in January 2025, a change of 116.9% from the reported amount the previous year. For NVIDIA, analysts have been increasing their projections over time. The company's consensus estimate has risen 4.7% in the last 3 months. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Welcome back. Shares of Alphabet jumping today after a big Q3 beat, reporting strong growth in cloud, search, and YouTube. But one number you might not have seen yet. The company says more than a quarter of all new code at Google is now generated by AI. For today's Tech Check, Deirdre Bosa digs through the data and finds Google might not be alone. Hi, Dee.
Hey, good morning, Morgan. So coding by AI, that's not exactly a new idea, but the scale of how it's being used at Google, more than 25% of all new code, that is unexpected and could have implications for the rest of big tech, which, of course, is set to report in the days and weeks ahead. Now, a lot of the focus for the hyperscalers so far has been on how they can improve efficiency for their cloud customers, sell more Gen AI products and services. But we're now starting to learn how much it's helping their own internal operations. CEO Sundar Pichai said last night on the earnings call that AI-generated code is boosting productivity and efficiency within Google. Anat Ashkenazi, in her first quarter as CFO, followed that up by telling investors that her top priority will be to drive more cost cuts across the company. Now, Alphabet's latest quarter suggests that AI is already helping and supercharging margins in its cloud unit. A few years ago, Google Cloud wasn't even profitable. Now, operating margins are 17%, a big step up you can see from a year ago. That is still a long ways from AWS's 35% operating margin in the second quarter, but it is making progress as the number 3 player in the space. Now, a relevant question for the rest of big tech as they report earnings in the coming days and weeks, will we see that same kind of efficiency gains, and in which units? Amazon's Andy Jassy said on his earnings call last quarter that Gen AI coding has saved the company $260 million or 4,500 developer years, calling it a game changer. When Amazon reports this week on Thursday, he might be asked how much Gen AI coding now represents, especially after Pichai quantified it. Microsoft, which reports tonight, is also using Gen AI coding and could be its own best sales pitch for enterprise customers looking to adopt Copilot or its new autonomous agents that will begin rolling out next month. Now, of course, guys, the other big question for hyperscalers this earnings season, it's around blowout spending on AI capabilities. Those worries, they drove Alphabet shares down nearly 7% since its second quarter earnings report. But today, the stock is up nearly 6% so far as better margins, driven by AI efficiency gains, that could help investors stomach continued spending. And Google did signal last night that it will continue investing in AI, building up infrastructure, buying GPUs. The good question, though, guys, is what are they going to do with all of that efficiency?
Last week, Nvidia, the leader in AI chips, reached a record high. However, as the Magnificent Seven companies begin to report their earnings, the stock is having trouble. Investors that follow the IBD methodology are considering whether to purchase the stock at this time given the earnings risk. According to IBD Market Surge Analysis, Nvidia shares have dropped below a buy target of 140.76, despite Alphabet reporting a solid quarter late Tuesday. Following the market close, Microsoft and Meta platforms are expected to release their earnings. In relation to the thousands of other equities on the stock market, where is the stock currently trading? With an ideal EPS rating of 99 and a composite rating of 99, Nvidia's stock is still outperforming the market. The stock is listed on the IBD 50, IBD Swing Trader, and IBD Leaderboard. However, funds have recently been hesitant to purchase the shares. On a scale of A+ to E, the accumulation/distribution rating, which accounts for fund purchases for the previous 13 weeks, is only a D. In the meantime, Nvidia's stock is fluctuating due to the Magnificent Seven leaders' earnings. Following last Wednesday's market closure, Tesla released its third quarter earnings. In the third quarter, Tesla reported that it had increased AI training compute by more than 75% year over year. The leader in EVs purchases its chips from Nvidia and is spending money on AI to educate its humanoid robots and driver assistance function. Alphabet exceeded earnings and sales forecasts when it released its results late Tuesday. Both Apple and Amazon.com have set Thursday as the date for their September quarter reports. November 20 is the deadline for Nvidia's fiscal third quarter results. According to recent reports, there is still a considerable demand for its AI processors. According to the chief investment officer of UBS Global Wealth Management, the combined capital expenditures of big tech, which totaled $218 billion this year and an additional $254 billion in 2025, augur well for the AI investment thesis. In the meantime, Vertiv exceeded profitability projections for its September quarter due to robust demand for AI data centers. CEO Jensen Huang announced last Wednesday that a design defect in its next-generation Blackwell chip had been resolved. Yields had previously been low, but Taiwan Semiconductor, a manufacturer of AI chips, assisted in recovering from that yield difficulty and resumed the manufacturing of Blackwell at an incredible pace. Following a 54.2% year-over-year increase in Taiwan Semiconductor profits, Nvidia's shares surpassed a trendline entry near 139.60. Apple and Nvidia both purchase AI chips from Taiwan Semi. However, after chip gear leader ASML let investors down with its outlook, shares dropped by over 5%. News that the company's shipments of sophisticated semiconductors would face additional limitations also caused shares to drop. There are currently sales limitations on Nvidia's AI chip shipments to 40 nations, and they might soon be extended to the Persian Gulf. Reports state that talks about new limits are still in their early stages. Nvidia is catching up to Apple in terms of market capitalization thanks to a robust rise. It would then be the largest stock by market capitalization, a title that Apple currently owns. Compared to Apple's $3.5 trillion market capitalization, Nvidia's is approaching $3.4 trillion. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector.